How does that inform your outlook in terms of deals and more companies you want to bring into the fold? Do you think that 2021 is going to be as busy of a year or more busy than we've seen previously?
Yeah, frankly, the amount of deals in the marketplace, they're pretty significant. There's a significant amount of capital. And what 2020 showed us is just because we can't meet in person, in technology, tech-enabled services and financial technology, healthcare technology, communication services, all of these areas, we can still do deals because in most cases, we've met the management teams beforehand and we know the sectors pretty well. So I don't think 2021 will abate in terms of deal volume. I don't know, Rene, if you would have a different point of view.
No, I think it's hard to assume that 21 will be even more difficult than 2020. I think we have reasons to be optimistic. Vaccinations now kicking in, and hopefully the virus and also the mutations of the virus will be contained. And therefore, trust will come back to the market, and trust is the basis for doing business and rebounding for the companies. So we are more optimistic for 21. Having said that, we were quite active in 2020. Warburg Pincus funds in Europe have done since June 7 investments, and so 2020 was for us a very active and successful year, and we see no reason why 21 would be less successful.
If you're confident then about the environment in 21, are there companies you think that are more on the distress side that have been hurt by the pandemic that now you would be interested in?
We are growth investors, Dani. So we sort of don't sort of think about companies that were really hurt by the pandemic, and so we should step in. If there were air pockets, for whatever reason, these are really good software businesses or financial services institutions. If there were just air pockets, we can look through those because we are long-term in our mindset. We also do a lot of minority capital, so we have flexible capital in that sense. So we would look through those. I don't think anything that we do is at a depressed valuation because those are turnarounds, and that's, we are much more focused on mega trends that drive our industry, things like AI, automation, machine-to-machine learning, how we use data in different ways. So we're going to lean on to those kind of trends as opposed to trying to be backward looking in what companies had some trouble in.
So where are the air pockets right now then that you'd be interested in?
A couple of things the crisis has made very clear. For instance, we are lacking digital infrastructure in Europe, in many markets in Europe, in many regions in Europe. And therefore we have invested in a company in the UK called Community Fiber, and they're building high-speed internet connectivity to households which are kind of underprivileged, and they do that for very affordable rates. So it's a very purposeful activity, and eventually it will be also profitable. That's one example. The other example would be that we've invested into Ionos. Ionos is a German-based but globally active online company which enables small and mid-sized companies to go online and do their business online, and be host their websites and provide them with communication tools. So these are the kind of companies who actually are very much needed in the crisis in order to increase the use of digital infrastructure, which is badly needed in Europe.
Now, I want to know about exits as well, because we've seen London at the moment. London IPOs are at least ones that have been announced. It's the most active start to the year since 2008. Does it seem like this is almost a window of opportunity? How long will it be open to exit IPO into the market? Does it seem that it won't last long or that it will close soon?
I think there's actually a strong backdrop for exits. Warburg Pincus as a firm did 9 IPOs in 2020 on various exchanges, and they've all sort of done well across the world. And in Europe, it's not just the IPO market. I think the strategic market, as well as the private equity market, is fairly robust for exits. We had a very strong exit in a business called Avaloq, which is, banking software in Switzerland. We sold it to a Japanese conglomerate. So I think the market for this, because there's significant amount of capital available and, the interest rates are so low, 0 to negative, I think the opportunity for exits will remain strong throughout 21.
If I can ask about another London-related topic, because obviously a lot of those IPOs are coming through the London market. I know you guys are exposed a lot to financial services. Are you concerned that the transition period ended and we didn't get any sort of equivalence?
Yeah, it's a good question. I think a lot of markets are creating, or at least standing by the existing agreements, at least through March, April, when the final agreements are supposed to be done. We have we just made an investment in Tilney Smith Williamson over the crisis, which is an asset wealth management business. We also have a broker business in McGill. And both of these have other ways to make these markets work. Tilney is just focused on the UK, so I think that's okay. But for now, we're waiting and watching.
Are you concerned at all, though? What are the sort of things that keep you up at night now that we've left and the transition period has ended?
I think the long-term effects remain to be seen. I think the jury is still out. For instance, the logistics and supply chains, how they hold up when they are being more stress tested. At the moment, the traffic volume are fairly low between the borders. When that goes back to the normal level of like 10,000 trucks a day or so, then we'll see how the new system will work and whether both sides on the channel are prepared for it. So that's an area we keep closely watching. Overall, it's very hard to say, but I think we look at the micro level rather than the macro level. We look at companies and sectors and subsectors, and do not focus too much on the big picture. And we'll find a lot of attractive opportunities both in the UK as well as on continental Europe.
Let's get into some of those sectors then. Tech, of course, is one that's always top of mind. How do tech valuations look to you right now? Are they too frothy, both in the public and private sphere?
Yeah, the tech valuations are high, but the valuations are a point-in-time data. Whenever we look at investments, we sort of look at the 5 to 7 year time frame and the secular trends underpinning those investments. So whether it's B2B application software or B2B infrastructure software, we sort of think about that particular company. How is that company going to evolve over the 5 to 7 years, and whether we are the right owners for that business at a micro level. As Rene was talking about, we look at unit economics. And we sort of think about what the exit's going to look like for this business. How have we transformed the business into 5 to 7 years? So the public or the private valuations today, while they're quite high, I think if you look back at 19, you'd say the same thing. You'd say valuations were at peak at that point, and you'd say the same thing the year before. So I think it's really a function of the micro level. It's the asset selection and the sector selection that we do that goes to sort of helping us over a 5 to 7 year period.
If in that scope valuations have a different meaning to you, does that mean that take privates are interesting to you right now? I know you've had them in the past, Inmarsat, of course, being a large one. Are you interested in more of those types of deals?
Yeah, we are. And partly because in some of these companies, the change that needs to happen in the company is hard to do in a public setting. So, one is valuation, but really what it comes down to, whether it's Inmarsat or some of the other ones that are in the market now, we look at them and say, what is the change that what is the transformation that these companies need to do over the next 5 to 7 years? And are the current public market investors patient to be long-term investors? Because, sometimes what happens is the earnings have to come down. You have to invest in R&D. You have to do organic product roadmaps. And that takes the margin of these companies down. You have to sort of change the on-prem perpetual license model to SaaS, and long-term subscription revenues come down. We are able to do that in a private setting. So it's those types of companies we're really interested in a public context. And the public to private will continue.